What is up, guys? It's Brandon here. So I did go on a little bit of a hiatus, and I took about 6 months off of YouTube. During that time, I did a couple different things. First of all, as you guys can see, I have a brand new office. So I actually bought a single-family home, so I'm no longer in an apartment. And my business has taken off, and a couple other things. So just wanted to let you guys know that yes, I'm still alive. Alright, so since this is a financial channel, it makes sense to talk about buying a house. So I know many of you out there, you're currently in an apartment, or maybe you actually, have your first home already, or maybe, you've already had a couple homes by now. But I wanted to talk about the fundamentals of buying a home, just because this is so real to me and something that's happened to me recently. So buying a home is not easy. There's a ton of different things to think about, from the realtor you're going to use, to the lender you're going to use, to what your credit score is, to what neighborhood you want to buy into, and a whole host of other different factors to get the perfect home for you. So let's start with the financial aspect of buying a home. So obviously, as you know, you're no longer going to pay rent and pay down someone else's mortgage, aka the apartment complex owner's mortgage. You're actually going to be building equity into a property. And again, if that's a townhome or a single family home, it doesn't matter. You own the home and you're paying into that each and every month. You're paying principal and you're paying interest. All right, so let's get into the financial aspects of owning a home. There's so much to cover here that I'm not gonna have time in just this short video. So if you guys have any questions on anything I've went over, or you have a question on something I didn't go over, please feel free to drop a comment down below as I get back to everyone. All right, so let's get into it. So in terms of finances, it does make sense for someone to actually own the place that they live in certain aspects of it over renting. For example, first of all, instead of paying rent to a landlord or apartment complex each and every month, you're actually, when you own a home and you finance a home, you're paying into that home. So instead of throwing away, quote unquote, throwing away that money on rent every single month, you're actually building equity into the home by paying down the principal and the interest on your mortgage. Something else to consider when you own a home is that you own the place, right? So say you have a couple extra bedrooms in your house, and you actually want to get some rental income or do Airbnb or whatever, you can actually do that when you own a home. I know in many contracts and different apartment complexes or what have you, in the contract it says no subleasing, you can't rent out rooms, etc. So when you own a home, obviously you have the power to do whatever you want to help you out with the mortgage, as opposed to when you're renting. So there are a ton of different costs that you're going to incur when you do decide to make that move and purchase a single family home. So when I got into this and I first said that I wanted to buy a home rather than rent an apartment, I really didn't have too much info on what I was getting myself into, but I can tell you that it does take some cash to be able to put down to buy a home. So there's a couple different things that you're going to need to do. So the first thing is that you're going to actually have to have, obviously, a down payment on a home. Now this is usually the biggest expense that you're going to make, because again, the more money you put down on that home, the lower your monthly payment is going to be, because you're going to be financing less. So the first thing is just having a down payment on your home. The second thing is paying closing costs. So whether that be attorney's fees or surveys for the property, or there's a whole host of other things that they throw in there. Closing costs, is another big thing that ends up, costing a couple grand to, even over, $8,000, $10,000, depending on, how much the house is worth. And thirdly is going to be prepaid escrows. So what prepaid escrows are is, you're basically prepaying. You're putting money, prepaying into an escrow account for, usually it's property tax, home insurance, and then sometimes even homeowners association dues. So between the down payment, between the prepaid escrows and the closing costs, it does add up to substantially a lot of money. So other than the financial aspect of buying a home, there's a lot of other things to consider. A couple other things are, of course, who you're going to use as a realtor. So there's many places that you can find realtors, whether it's on Zillow, whether it's a family member or a friend. There's a ton of different realtors out there, but they're not all created equal. And I actually found my realtor through a Facebook real estate group because I was into investment properties and things like that. So I actually had my real estate agent show me a couple different investment properties. I decided that it wasn't really the time for me to invest in an investment property, and I actually wanted to get a primary residence. And just so happened that he didn't do just investment properties; he also did residential real estate. So, but again, you can find a real estate agent anywhere, but just make sure to vet them. The next big thing, is going to be a lender. So who are you going to use? And that's assuming, of course, that you're not paying all cash for your home, which 99% of people do not pay all cash for their home. But where are you going to find this lender? So back to the real estate person. Finding a real estate person, usually they actually have connections. Whether that be to plumbers or lenders or maintenance workers, etc. They usually have connections, and that's how I found my lender, is through my real estate agent. And I actually went out and got a couple different estimates, of course, on how much it was going to be, how much that lender charged for different things, and it ended up being that my real estate agent did have the best lender for my certain needs. So that's something really to consider when you're looking for a property, is obviously getting a good lender. And along with being lent money, it comes a credit score. So credit score is huge when it comes to people. Your own personal credit score is huge when it comes to someone loaning you money. And that is because your credit score essentially states how risky of a person you are to lend money to, because it shows the higher the credit score you have, the more you've paid your bills on time, the more that you haven't had certain mishaps with your credit cards or just any loans in general. And obviously the lower your credit score, you might have gotten into some troubled waters with certain payments on things, and so you're looked at as much more of a risk to the person loaning you the money, aka the lender. So knowing your credit score before you purchase or decide to purchase a home is a huge thing, because you don't want to be paying more interest on the loan than you have to. So my advice, I had a very good credit score before I decided to purchase my home, but if you don't, I would highly suggest building your credit up before you go ahead and make that investment on a home, because it's really going to hurt you in the long run if you have to pay a ton in interest. And I consider a good credit score anything I would say like 690 and up. That's a pretty decent credit score. Obviously you want to be in the mid to high 700s, and of course even in the low 800s if you can. Okay, so enough about financials. Let's talk about area. So where location. Obviously, everyone says that for multiple things in life, but it's really true when it comes to real estate. So the location you choose to live is going to have a huge effect on the price of your home. And that goes for pretty much any state, any city. So for example, I live in Charlotte, North Carolina. If I were to live, really close to the city or in the city, the houses there are much more expensive. If you were to live, like 10 to 15 minutes out of the city, they drastically drop in price. So knowing where you want to live and what you can afford, it is huge when it comes to picking out where you want to actually look at open houses, because again, you don't want to waste your time with a house you can't afford, and of course you don't want to waste the real estate agent's time who's showing you the property. So in my case, I chose to live about 10 to 15 minutes outside of the city, just so I could get a little bit more bang for the buck. And I'm really glad I did that, because as cities go, they usually have rings of when, new things are happening, new things are being built, and the property values start increasing usually in rings outside of major cities. And that is a perfect example of what is happening in Charlotte, North Carolina. Living in the city, it's very expensive, and your appreciation of your home can only go up so much. Whereas if you buy a little bit further out of the city, you can buy for a good price and your property can appreciate over time. And that leads me into my next point. So property appreciation. So not only are you taking advantage of paying into your own mortgage every single month and building equity into your own home instead of renting someone else's apartment or home, but you're also taking advantage of appreciation, or you can be. So for example, that leads me into buying new construction or buying a house that's been built and lived in for a while. I chose to go the new construction route, so that means that no one else has lived in my house before, it's just me. So one of the reasons why I bought new construction is to take advantage of appreciation. And of course your house can appreciate if you buy in an established neighborhood, but you have the most chance of appreciation in my mind when you buy early on in new construction, because usually the prices are lower in the beginning, and then as they sell more homes in the development, they start going up in price, and that's exactly what happened to me. So I bought one of the first single family homes available in my area, and then I got to know the neighbors, and the next person that bought paid X amount more than me, and then I got to know the next person that moved in and they paid X amount more than me, and now there's only a few single family homes left, and it's I can't wait to see what those are going to sell for. But basically my house has already appreciated because the same model and square footage of home has sold next to me, a couple of them, and they're significantly higher price than mine, about $15,000 to $20,000 more than I paid for mine. So that's just equity that I can have in my home, and I've only been living in my home for about 3 months. So to be able to take advantage of that equity is super big for me, for having money for a new down payment on a new house that I may buy in the future. So all that's great and dandy, but there are some things that could be seen as negatives or cons to owning a home. And one of the major ones is obviously you're financially responsible for everything. So for example, like in my apartment, if my hot water heater broke or went out, or my air conditioning broke, or I needed a plumber to come over and fix something, I would just call up the front desk on the phone, they'd get someone out there same day or the next day, and then I didn't have to pay anything for that. But when you own a home, obviously you're putting in all the calls to the plumbers, to the roofers, to the carpenters, whoever, the landscapers, and that's all riding on your shoulders, and you're financially responsible for it. So that can be seen as a con, whereas when you're renting, it's the landlord's job to fix everything for you. Another huge thing is, you're financially responsible for the house and the mortgage itself, and if you don't pay your mortgage every single month, and you don't pay your property tax, and you don't pay, if you might have HOA dues, your house can actually be seized from you from the bank, and that's going to look very, very bad for your credit and many other things. So whereas you might be renting an apartment, or you're renting a home, or you're renting a townhome, if you stop paying, there's many laws in place that you can actually the tenant can stay in the property for an extended period of time without actually having to pay anything. And depending on the apartment complex or the landlord, they may not even take you to court for not paying rent for X amount of months, and you can kind of just get up and leave from wherever you were when you were renting, and there's not as much implications as if you have your own home and the bank seizes it from you, and you're out all your down payment money and all the money you put into the home. So it's risky in that aspect. If you're thinking that you may not be able to pay your bills, or you lose your job and something happens to you, there is a risk to owning a home that you have, rather than if you rent an apartment or rent a home. So all these things you really have to take into consideration when you're looking to buy a home, or you think you want to buy a home. There's just so many things to look into that I didn't even know until I went through the process. So I kind of learned as I went, and it ended up working out for me. You know, I did get a really good deal on my home. I got a great interest rate because now, as I'm filming this in April of 2020, interest rates were super low. I ended up getting like a 3.3% interest rate on my 30-year mortgage. And so that is awesome for me because I most likely will never even have to refinance on my loan because I got such a low interest rate to begin with. So on top of all that, I really want to talk about just, you know, like the lifestyle you live when you live in a home rather than an apartment. And, you know, of course you can rent a home, so it's like you're living in a home, but you don't own it. But I came from an apartment. So one of the major things that I love about, you know, owning a home, a single family home that's not attached to anyone, is just the privacy. So before, you know, I had someone above me in the apartment, I had someone below me, I had someone to the left of me, the right of me, all around. And there was a ton of different noise, right? There could be people walking upstairs, or people, you know, downstairs blasting their bass or music, people on the left and right doing the same thing. So that's one of the major things I love about owning a home and living in a single family home, is that you don't have to deal with all the crowds, you don't have to deal with the parking situation. Usually places have, you know, like parking decks or outside parking where you kind of have to fight for a good space. When you own a home, usually you have, you know, a garage or you have a parking pad that's a designated space to you. So that's one of the major things that I really love about owning a home versus renting an apartment. So I know that there's so much more to go over when it comes to owning a home, but I just wanted to make like a quick little broad overview of why I chose to get a home and, you know, the implications of owning a home versus renting. You know, so I'm really stoked on owning this home, and my plan is to keep it for, I would say, 3 to 5 years and then rent it out. And then basically, because I'm in a super walkable area, there's tons of different shopping and tons of different restaurants around me, so it's a very desirable place to live and, you know, be able to rent as me as a landlord and have a tenant come in and rent it. And one of the main reasons I wanted to do that is because, you know, first of all, you avoid capital gains tax, at least right now, because again, I'm not going to sell the home. What I'm going to do is take out a home equity line of credit later down the line in a couple years, and then pull the money, the equity that I've built up in this home, and then use that money on a down payment on another primary residence. And I'm going to do that because it just makes sense for me and my current situation, because, you know, I won't have to put really any other money out of pocket. Of course, depending on the size of home I get, I won't have to put any money out of pocket down. I can just pull all the money out of this house. All the while, there'll be a tenant in here. They'll continue paying down my mortgage each and every month, and they'll continue building equity into my house for me. And that's really one of the beauties of owning real estate, is that, you know, you can, you know, live in it as a primary residence for a little while, build up some equity into it, pull that equity out, put that money towards a down payment on another house, live in that house for a little while, and then pull that money out and do it all over again and over and over and over again, depending on how many properties you want based on your financial goals. So if you guys have any other questions, I know that was, you know, a pretty short video and there's so much to go into when it comes to real estate. I just wanted to share my aspect of it, but if you guys have any questions on anything from, you know, financing to finding a good real estate agent to, you know, what makes a good place, like buying a certain area, like what you need to have around you to make it a good area, just please drop a comment in the comments below and I'll be sure to get back to you. Oh, and before I forget, of course I'm going to give a house tour of my new home, because what, you know, financial review on housing would be complete without a house tour of my new house. Basically everything's done because I've been in here for, you know, about 2 months or so. So stay on the lookout for that, and I'll see you guys in the next video.